10-year note yields continue to hover near the midpoint of that October range that was set on October 3rd and October 29th. So you had kind of a full month of trade in there in October. We've kind of gotten to the point now where we're sort of in the middle of that range and hovering, so to speak. Remember, in the midpoint, we're just a tad below that. So the market's gravitating towards that, despite the fact that we've seen a huge recovery in the equity markets, a huge sell-off in the dollar. Commodities are all over the map with oil getting crushed, and it just seems to me that the bond market's just sitting there again, waiting for some kind of catalyst event or some kind of what-if moment that's going to move bonds along, add the volatility that we've seen in all these other commodities and in all these other investment areas. So right now, with everything else going crazy, the bond market's sitting back and watching, and I think probably smiling a little bit as we have a lot ahead of us on the calendar. And if you look at what's going on in market volatility, bond market volatility is elevated. It's not on the highs, but it's near the highs, and it's elevated from the averages. As we've got a laundry list of what ifs to come. We've got employment in the morning. We've got next week, we've got midterm elections, and we've got FOMC, followed by more earnings, followed by G20 at the end of the month, followed by FOMC again in December. And whatever comes with year-end trade, whatever comes with equity volatility movements, whatever comes with the dollar on top of that. So right now, the bond market's sitting and waiting. And one thing that we're not talking about here that's gotten very little press, when we do talk about the busy calendars ahead with economic data and Fed policy and international meetings, auction sizes have increased, and they will begin next week. So amid U.S. midterm elections, amid FOMC, November FOMC, where we're not going to get any kind of rate hike, or we're not really going to get any kind of press conference, but we will get some kind of guidance from the Fed. We are going to introduce 3, 10, and 30-year auctions that are considerably higher than they have been. So we're going to continue to issue debt at a rising rate. And that could be one of the reasons why we're seeing 10-year note yields hover at these elevated levels. But also another reason as to why aren't they going higher faster if we are going to be seeing more debt issued. So a couple of questions that need to be answered, likely will happen next week when we get a look at demand for those auctions at higher levels, at higher yields with all this market volatility. It will be interesting to see if they're bought with both hands, or if we end up just seeing kind of a so-so demand, lukewarm bid. So right now, seeing 10-year note Treasury yields hover at the midpoint of the October range, but we have a lot coming up in the days ahead.